Hello, good afternoon. You're watching Closing Trades on ET now, and for now the market is holding on to 24,300 but from the highs of the trading session, which is above the mark of 24,400, we have come off quite substantially. And in fact, talking about coming off, it's Bank Nifty which has moved into the red right now. The culprit can be called HDFC Bank because that stock is down almost 2.25% today. So after that rally that we saw yesterday, it's getting undone today. So there's quite a bit of pressure on HDFC Bank. ICICI Bank is trying to bat for the bulls, but it's not been able to match to the kind of declines that we have seen. In fact, Bajaj Finance too, despite reporting a good Q1 update, is actually in the red right now, so a bit of profit booking happening there. The sectors in the space which has actually managed to outperform today is clearly Pharma. So Lupin is up 7% on account of that Kotak upgrade coming in. So that stock is firing away. Laurus Labs is high by 4%. News was just running for you at the bottom of the screen, wherein Zydus Life has got approval for one of its drug as well. So that stock is high by almost 4%. IT2 is having a great day. So Coforge and HCL Tech, Persistent Systems, these are the stocks in focus right now. And defense as a theme, Aisha, for the last couple of days has been firing up. Look at Mazgaon Dock today, up 18%, and even Cochin Shipyard for that matter.
Oh yeah, both those stocks on a tear right now. Mazgaon in specific has seen quite a big move in today's trading session alone, and that's pretty much been the case with the Cochin Shipyard as well. So even within defense, what you've seen is it's not really been an across-the-board move, but specific stocks have given you parabolic returns, and clearly these two names are shining bright amidst that. It's important to also take note of what's really happening across the globe, because as we approach closer to the UK elections, you're actually seeing quite a bit of rally in the UK markets. FTSE holding up about 63 odd points as we speak right now. DAX is well higher by nearly 100 points. It's a 1% move coming in for the French CAC as well. FTSE MIB, Stock 600, all looking very, very smart. Of course, the US equity markets are closed today. But that said, you've got Asia as well, which had a decent handover for itself. Our markets, of course, given the kind of powerful move that we've seen, we are a little bit range bound, though with every given day the range is only moving upwards, and we have been hitting, at least academically, those all-time peaks across the indexes. Let me now welcome on board then our experts and figure out what they're making of the market right now. We have Vineet Walinchkar joining in on the fundamentals, and Kunal and Naresh is always here to talk about the technicals as well. Kunal, some amount of consolidation well on the cards?
Yeah, I think looks like that now we could be looking at more of a stagnation for the indices, at least looking at the way the market returns are playing out today, because I think the key data to look out for was the lack of follow through for a stock like HDFC Bank. Now, after yesterday's gap up for the stock, where it moved closer to that 1770, 7075 mark, and from there the stock going to a mild correction, coming back and filling that gap. So that indicates that the pace of rally is now cooling off for that stock, and same is happening with many of the other larger cap names which are going through a phase of rally. Reliance had a fantastic rally going into the end of the previous week, and this week somehow has been a bit more stagnant for the stock in terms of the price range. So I would probably believe that this could be an indication that the markets may also go into a gradual consolidation. That doesn't mean that the view for the indices have changed. It's just that I think we would now have to be very stock specific in terms of trying to pick up trades which are riding on high momentum, rather than relying on stocks which could probably have given a breakout earlier, or where the momentum has been lacking, and to try and anticipate that there could be a reversal could be a bit tricky. So I think it's better to go with the stocks which are riding on high momentum. I think that's where the momentum would continue.
Okay, point taken. Vineet, a view on the pharma space in AstraZeneca, Lupin, Laurus, Zydus Life, they're all firing away. Any stock within the pharma vertical that you like? I remember you have been quite positive on the likes of IOCL, IOL, etc. Anything else that you are watching out for?
So, we've just recently initiated coverage on Indoco Remedies. This stock is, absolutely available at meltdown valuations. Very, very low downside, and the company has taken significant measures to alleviate the drop in margins which we've seen in the last year. So we are expecting over the next couple of quarters the margins to come back, and they have done sufficient investments, almost 400 crores invested over the last couple of years, another 200 crores of capex on the cards. And we believe that the company can easily clock 16 to 17% top line growth over the next 2-3 years. So given that kind of environment, I believe that Indoco Remedies is a stock which is going very cheap available at stress valuations, and the management is pretty well embedded in the business. They've been around for 30 years, and their product range is also very strong. They've taken a lot of remedial measures in the US in terms of strategy, where they're setting up their own subsidiary, and so earlier they were doing dossier sales and partnerships. So that is going in with their own subsidiary in the US. We expect margins to go up. Also, they're carving out a new subsidiary within themselves, which will cater to OTC products. They have Sensodent, which is a very strong brand, commands 90% share of the dental medicated market. And we think that this brand can really fire away. So next 3 years looks very good. One of the cheapest stocks on a PEG ratio and good ROICs. So it's a thumbs up from me, and I think 700 to 1,000 can be the range for the stock over the next 3 to 4 years.
Right, okay, that's some of the take coming in on the pharma universe right now. But Naresh, hi, afternoon. Let's talk about technology. It's really sort of flattered everyone. One didn't think that it's going to be such a strong move across IT. And today, of course, the likes of HCL Technologies are the ones which are actually, ruling the charts. What within IT do you believe one can look to buy afresh?
So as of now, the breakouts which have shown a little more strong momentum and structure has been Tech Mahindra, which gave a breakout above the swing highs of the last few months, above that 1400 mark. Still has a lot of headroom. The previous highs were around 1800, 1850. So that is one. HCL Tech clearly, because it's been a leader in terms of the large cap IT names. So any dips back to 1500, that would be a buy. TCS looks interesting because, again, it's been a relative outperformer in the whole pack. But closer to 3900, 3950, any dips would be a buying opportunity. The only difference is they are no more strong trending. They've been making slow and steady moves. So it's better to be a buyer on dips than to get into rallies here.
That's the view coming in as far as some of the IT stocks are concerned. But remember, a couple of brokerages have actually turned positive. Yesterday, it was Nomura, which has turned bullish on the entire sector. In fact, the likes of Wipro, etc., had got a double upgrade. We did speak with the analyst earlier today, Abhishek Bhandari. Listen into his view on IT and why they turned bullish now.
The basis of our upgrade right now is the proprietary G2000 database, what we maintain, wherein we track the revenue growth outlook of the largest 2,000 companies in the world by revenues, who cumulatively form around 80% of global tech budgets. Now, when we had downgraded the sector in May 2022, we saw early signs of revenue slowing down, leading to a cut in discretionary demand. And now we are seeing some signs of stabilization in those revenues, for those companies, which makes us believe that the further bad news on the discretionary cut may not happen. And the same database, throws up an interesting data that the revenue growth for these enterprises are expected to rise to almost 4% after declining 1% in calendar 24 to around plus 4% in calendar 25. So to us, the bad news from a revenue decline or revenue negative surprise perspective is largely over, which means that the EPS cut cycle for the sector should, largely be over now. And hence it makes, sense for the investors to relook at this sector.
Right, okay. Well, the two stocks that we flagged off earlier at the start of the show, let's bring up those for you, Mazgaon as well as Cochin Shipyard. Vinit, have to get your opinion on the entire defense pack and especially these two names.
I personally think that they're in very bubbly territory. The valuations are very rich, but the momentum is very high out here. And, the order wins are good. But, if you really want to take a fundamental view on in terms of the valuations, I think they're a little stretched out here. And while they obviously wouldn't want to ask people to sell, but, you have to be very careful with these trades out there.
On some of the defense stocks, definitely there's a lot of momentum there, but the big question is how much is in the price or not. But in terms of the other big movers, it's Honasa Consumer also, which is perking up 8%, and Inox Wind up 11%. Kunal, a view on either of the two names if you track Inox Wind and Honasa Consumers?
So I think Inox Wind is interesting because the stock till just about yesterday or day before had come back towards very close towards its 200-day moving average, ending almost a 6 to 7 months of consolidation, which started off from December 2023, Jan 2024. Stock had made a high of 180, and from there, from 180 to 140 was the broad range for Inox Wind. And I think after yesterday's mild retracement, today's catalyst in terms of the news flow, I would probably believe that we could now be looking at a breakout and an end of this time-wise consolidation for stocks, for the stock. So specifically, I think at current levels also, I believe that there should be an upside potential of another 20-22 points for Inox Wind, which should take the stock back towards that 180 mark. So even at current levels, I would believe traders could look at a buy. Of course, the quantum of or the position sizing has to matter over here, because after today's run up of 10%, it might be possible that the stock may get into a couple of days of pause. But I think broadly from here on to the next maybe couple of months, we should be looking at least another 15 to 20% upside.
Okay, that's a buy really coming in on Inox Wind, which has been on a tear today. But after making the nation proud in the Caribbean and lifting the T20 World Cup trophy for a second time, Team India has returned home to a rousing reception from almost 1.5 billion people. Fans in large numbers gathered outside the Moria Hotel in New Delhi, where the players directly went and then celebrated with the staff and supporters by cutting a cake. The victorious squad then met the Prime Minister at his residence, and now the men in blue are going to arrive in Mumbai, where they're going to be taking part in an open bus parade and celebrate the T20 success with fans in the evenings. And after that, they're going to make their way to the Wankhede Stadium as well. We'll take a very quick break. Be right back. We'll continue tracking markets and all the other news on the other side. But you know what? Some of our team members are already there. We have Time Network's Rakesh joining in to tell us what exactly is happening on Marine Drive right now.
Well, we are right at the Nariman point, and we are just about to reach the Hotel Trident, and then only 100 to 200 meters away from the NCPA junction, from where this victory parade is about to start. And right now, I would try to show you this video of the bus. If I would ask my camera person to get down the car and show the video. So this is the open bus which is prepared, which is all set to welcome the team India. So all the champions will onboard this open bus, and then this victory parade will start from the NCPA point and will end at Wankhede. So even the Mumbaikars are eagerly waiting for the team India, and they want to welcome team India. In fact, the team players are also very excited to meet their fans, so that they can enjoy and they can share this historic moment with their fans. And this is, you can see that our T20 World Cup champions 2024, and you can also see a huge posters where you may see Virat Kohli, Rohit Sharma, Bumrah, Jadeja, all the players are lined up here along with the Jaisha holding this trophy. So this is the special bus, and that's the open bus, and in the same bus team India will be boarding. And I would like to show you the location. This is the Marine Drive location, and this bus is reaching the NCPA point very much shortly, and the excitement is very high. Everybody is very excited, and they all are waiting for that historic moment to be created again.
Welcome back. Well, the top performing sector today is Pharma Index, with a lot of stocks buzzing around, right from a Lupin to a Laurus to Wockhardt to Zydus Life. Forum Parekh, the lead pharma analyst from Sherkhan by BNP Paribas, is joining us on the show right now. Forum, hi, good to be speaking with you. I wanted to specifically discuss Zydus to begin with, and Zydus Life at that. Today, in just 30 minutes ago, the stock really got an US FDA approval for a Darby drug. The stock is sitting at 1 month high level. The updates that we have got with respect to the Q1 domestic as well as the import data suggests that this quarter is going to be strong. What's your own expectation with respect to Zydus Life and the stock movement going forward?
Yeah, so we like Zydus Life, and we also believe that this quarter is going to be healthy for Zydus because its US business is doing good. Also, it has launched Mirabegron in the US market, which is a very big product, which almost have a market size of $1 billion, and it has launched two strength, 25 and 50 mg. And it is the sole player to launch in 50 mg drug. So this will definitely reap the benefits in the US market and will lead to increase in the margins. Also, it has many specialty products and novel products which are in the advanced stage of its clinical trials, which are expected to be launched in the near quarters. So, led by specialty and Mirabegron sales in the US market, we feel that Zydus Life's US business is going to report good set of numbers. Also in India, wellness product is doing good, and other new product launches and higher MR productivity is expected to lead to above IPM growth for the domestic sales. Therefore, overall, Zydus Life will tend to report some 25% kind of EBITDA margin. Therefore, we have a buy call on Zydus Life with a price target of almost 1,200 rupees.
Great. Forum, hi, afternoon. Wanted to understand what, according to you, is acting as a trigger for Lupin. I mean, the stock is on a tear today. It's a good 7% move that you're seeing. Many believe that there is a strong US trajectory which one could foresee for not just this financial year, but even the next. But what is it that you are penciling in terms of triggers for Lupin?
Yeah, so we had upgraded the stock couple of quarters back, and we continue to remain bullish on the stock. And we have a target price of almost 1868 rupees on the stock because of a slew of new product launches that Lupin has got. So last year earnings were backed by Spiriva. This year again it's going to be backed by Mirabegron, which is almost $1 billion market size. And next year also it has good ophthalmic products where it has exclusivity. Tolobopten is one drug which it is going to have exclusivity in $1 billion market size for next year. So because of the slew of product launches, as the plants have got clearance, so these products are into specialty side where it will not face much price erosion pressure, and therefore EBITDA margin is expected to go increase by almost 100 bips every year, and on a quarterly run rate it will sustain $200 million run rate, and can even go north of 10 to $20 million run rate. So we believe that Lupin is a good buy with 1868 as a target price.
1868 thereabouts is the target for Lupin. I know, Forum, you don't actively track Walcott, but it really, kind of begs to ask this question given the fact that stock has really run up 80-90% within a matter of month. This 5222 drug, what's the, significance of this if you'd want to talk about that? And any call, if at all, on Walcott as a share or what's happening in that company at the moment, which could be a turnaround story perhaps?
So we do not have the stock under our coverage, but yeah, I did read the updates, and it is again a very good, a positive clinical trial for them, which has led to, directly jump into phase 3 clinical trial for Workout. So because the results are very successful, and I think again it is the sole player in this drug with large market size. So basically, the fact that US FDA is allowed to skip phase 2 and directly jump into phase 3 will lead to early commercialization of the sales, and therefore work hard is on the tear.
Indeed, work hard it is. But in your coverage universe, Forum, other than the stocks that we've talked about, where else do you think there is, value on the table and you would recommend a buy right now in any of the pharma names?
Yeah, so Lupin is one that we have been, pitching buy on. Zydus Life is there. We also like Sun because despite all the plant problems that this company is facing, but its US specialty drug is doing good, and it will continue to do good. Even it has new product launches coming up next month in the specialty side. Duroxolitnib is one stock again, which would be launched in a couple of months, and it has exclusivity there, which will lead to a global specialty portfolio going from almost 18% to north of 20%. As specialty portfolio increases, gross margin will also increase. Right now, gross margin is at 80%, so which we feel can increase, by 50-100 bips as more and more specialty product comes in, and no company in the industry has almost 80% kind of gross margins. So we like Sun, And we also like Torrent Pharma from the domestic side, because US will start contributing for Torrent Pharma as the H plant has got clearance, and Q ratio is doing good, which will lead to increase in the increase in the domestic sales above the IPM numbers. And also Torrent is one company which has almost 32% kind of EBITDA margin, which no company in the industry has, and sustaining such higher run rate is also commendable. Q ratio is picking up, and all its brands like Shell Cal, Teddy Bar, Uni Enzyme will now be sold across the over the counter in pan India. So that will also lead to sustenance of higher margins. So from the domestic side, we like Torrent, and from the US side, we like Lupin and Sun.
Right, Forum, great to have you on the show today. Thank you for taking the time and speaking with us on your views on the pharma space. Okay, let's move on. We're going to take a very quick break on that note. We've completely flattened out in the index. Pharma and IT, of course, still holding out, and so is ICICI Bank. But on the sidelines of an event here in Mumbai, NSE MD and CEO Ashish Chauhan spoke about the rise of trading and speculation in the markets as well, also adding that Indian markets will remain robust in the long haul.
Exchanges have not been told to increase the fees.
Okay.
It is the framework which is saying that you don't have to charge on a slab basis, which was a discounted framework. You can charge on an equal basis to everyone. So it's a bit of a miscommunication or misunderstanding on your part. But whatever the case, once the regulators regulations have been formed and issued, we will have to abide by that. And broadly speaking, the transaction charges of exchanges are amongst the lowest part of the overall transaction cost which anyone pays, which would be for the investor. It's not that significant vis-a-vis what other charges they pay. It will have impact naturally. Any regulations will have its own impact, but on the investor side, it's not even a statistically significant number.
Any advice you have for the retail investors, given the fact that the markets are at an all-time high now?
In a way, see, investment in India is investment in India's future also, and your own future. So at the same time, we must do it with a bit of studies, understanding, and stay invested long term. Sometimes we get a feeling that buying in the morning and selling in the afternoon is called investment. It is not investment, it is trading.
Back with closing trades right here on ET now. Multiple block deals now on Nykaa, stock under pressure around that 170 odd level. In the meantime, let me take it across to Ansh, find out what are the buzzers in trade, while the markets, of course, have given up their gains, the index that is.
Well, pharma stocks are buzzing in today's session, and first stock we have is Laurus Lab, as the stock has given a good breakout from its downward sloping resistance trend line with volume of over 5 times its average trading volume of last 10 sessions. Apart from this, Lupin will also be in focus, as the stock has given a breakout from its horizontal resistance zone, which is around 1650 level around, with good volume of over 4 times its average trading volume of last 20 session, indicating good participation in today's breakout. Lastly, Zydus Life will be in focus, as the stock has given a breakout from its cup and handle chart pattern, touching 1 month high level as well, indicating strong positivity in the stock. Apart from this breakout stocks, there are high chances of a Bandhan Bank, Aditya Birla Fashion and Piramal Enterprises to get into band list for tomorrow's session. So keep an eye on the stocks.
Thanks, Ansh, for joining us with that quick take on the F&O and the price volume buzzers. But Gaurav Mishra, Head of Equity from Mirae Asset Mutual Fund, is also joining us on the show. Gaurav, hi, good to be speaking with you. First up, let's talk about the market direction itself, because while we keep asking what are the fresh triggers for the market right now and we fall short of answers, but the market continues to trend higher. In fact, 24,400 today. What's the view as to where the market is headed right now?
No, I mean, short-term markets could go either way, frankly, from where we are right now. But for investors who are looking at markets with a slightly longer horizon and trying to, benefit from the power of compounding, say, over the next 3-5 years, I think the trend will be upwards. such that the returns will be better, healthier than other asset classes. But short term, we are getting into the budget. There will be certain policy nuances. The other events globally, we're running a very tight, high interest rate regime. Those things will eventually revert. There might be some lag effect of and some possibly other consequences of all of that. So that might have a bearing on short term movements.
Sure. Gaurav, so given the market construct right now, wanted to understand what are the pockets that you're overweight on right now? Any sectoral themes that you think still hold value and still can be bought?
No, as a house, we have been fairly comfortable within the banking and financial space. And that's a space where clearly, we're seeing a good credit growth cycle, asset quality cycle, and there's fair amount of, a few years at least of that continuing from where we are right now. That's one big space actually where we are, comfortable with. Besides that, I would say even select pockets within the discretionary part of consumption. And additionally, if I had to add a third area, I would say, areas where there is this India manufacturing and export advantage, ranging from specialty chemicals to pharma, manufacturing, research services. So yeah, some of these, three, four areas.
Interesting. Hold that thought. Let me welcome on board Soni Patnaik, who's also joining us on the show right now. Soni, it's the day of weekly options expiry, and it seems like the 3 p.m. move is happening on the downside because there has been a fresh bout of selling in the last few minutes. We're below the mark of 24,300. What's the near-term call on the market and the index?
Good afternoon. Thank you for having me on the show. I think Nifty was on expected lines. It was supposed to test 44,400. It has done so today. It has also entered into overbought parameters as of now. So I think it's wise just to wait for a sizable correction that may happen in the index and book out the profits. And this dip can be seen towards 24,200, 24,100 range. Crucial series support is still at 24,000. As long as that support level is defended, markets may just see a bounce back from the dip around 24,100 or so. But a good correction can only be seen below 24,000. So as of now, from current levels to 24,200, 24,100 is a range which it can get tested, and it's advisable to get into stock specific strategy and just book out the profits from index.
Right, interesting. Soni, just wanted your opinion on two of the sectoral indexes, both Nifty IT and Nifty Pharma, and where is it that you see the momentum going forward?
So I think Nifty IT still has good momentum. It has seen decent rollovers from June to July series. The stocks in that space can still outperform. Of course, I think large cap IT space is going to hold more momentum than mid cap IT as of now. Especially stocks like Wipro and Infosys are the ones which can outperform the mid cap IT space. So I think it's wise to hold the portfolio in large cap IT over mid cap. And if we talk about pharma space currently, it's just today that we've seen a good momentum in pharma. If we just talk about the data points, there was a lot of mixed bag of sentiments across the pharma space. So I think it's better just to stick stock specific strategy in pharma. For stocks, you can look at for Syngene and Torrent Pharma. These are the stocks which are looking good on charts as of now.
Point taken. Gaurav, just coming back to the point that you were making on financials, and you said that as a house you've been positive on that space, but break it down for us. Private, public, insurance, financial ancillaries, NBFCs, any pocket particularly that you are favoring within the financials pack?
Yeah, sure. So in terms of, some of the attributes we're seeking on quality, growth, outlook over medium term at least, and then of course the comfort with management and the evaluation. So keeping all those in mind, we are comfortable with the big private banks. That's clearly one cohort. Amongst the PSUs, maybe it's more selective, where it's just maybe one or two in that sense. But yes, together amongst all these, we are putting all of them together, we are overweight. Besides that, then within the non-banking and insurance, it's a bit of a bottom up, but in the areas of life insurance, we are overweight. Think there's still a lot of structural story there. There have been some amount of regulatory headwinds there, but think those will eventually subside as the industry resets and then growth starts coming by. Then, of course, amongst the NBFCs, it's a bit of, they're saying, a bit of bottom up there. There's some cohorts where we are a bit more comfortable in the recent times, and we are present there, more related to could be some auto and consumer financing kind of segments.
Right. The other thing I also wanted to talk about, themes that you're underweight right now on, or think that, they've sort of given all the value that they hold and have run up ahead of that as well. And it's now time to either profit take, or do you not find maybe some material value on ground right now in those themes?
Yeah, sure. So, I mean, in terms of underweights, there's some categories we have been underweight for a long while because maybe there's uncomfort, say, on valuations related to the growth proposition, say, consumer staples. But with reference to what we would have gone underweight in recent times or, reduced positions, these would have included in the past few quarters, stocks in the defense, sector, in, select automobiles, that those kind of areas in recent times. I mean, things like sectors like capital goods, we have been sort of underweight for a bit longer, but then we are represented in that space through other indirect plays, in that space.
Fair enough. Thanks, Gaurav, for making time and speaking with us today. So that's a view coming in from Mirae Asset Management. But for the time being, in terms of the market, there has been a bit of a slip. We are around that 24,300 right now. In terms of the gainers in the last few minutes, Concord Biotech has seen quite a bit of spike. Solar Industries, the stock has been doing very well for itself in this entire week. And Honasa Consumer too is very interestingly poised at this point of time. Nuresh, any view on Solar Industries as well as Honasa Consumers?
So Solar Industries, as of now, the stock has already done really well over the last 1 year, an ancillary of the defense play. Yesterday, it did correct from the top. So for now, could be getting into a pause. So not a buy at current levels. So would be an avoid. Honasa on the other end is interesting because the stock is coming back to the same prices where it had topped out after the listing. So once it crosses 500, that would be a new high. Short term, it's given a breakout above 460. So now that becomes a stop loss for the stock. And it's a tradable idea for the near term. So positive in terms of price and volume action on Honasa.
Okay, so that's a view coming in on Honasa Consumers. Nykaa, of course, has seen that large trade and that's why it's coming under a bit of pressure right now. But I also wanted to put the spotlight on HDFC Bank. Yesterday, the stock was up around 3%. Today, it's completely given up those gains. We did speak with Digant Arya earlier in the day to get an understanding whether the stock has kind of broken out or has it run up ahead of the fundamentals. Listen into his view.
Margin improvement, everybody is saying that, from 3.4, 3.5 will, quickly go to 4. I don't think that's going to happen in a hurry. And then as far as, even the loan growth is concerned, loan growth is probably, the retail part is going slow. Whatever growth will pick up will probably happen on the infra corporate side. HDFC is not known to be very strong on those sides. So I don't see that growth and the margin problems will get solved in the immediate quarter. And the stock has had a good run up along with the market. So I think people should celebrate and, you have to wait for a few more quarters before the results actually fire up.
Okay, that's the take coming in on some of those buzzing stocks. Continues to be Lupin, Laurus Labs holding out very well, as is the case with Metropolis as well. Nuresh, in fact, I want you to come in on the charts of both, Laurus, Metropolis, and actually even Lalpath Labs. That's also shot up 3%.
So Laurus is looking very interesting because the stock has come back to that 455, 460 mark. If you look at the last few attempts, it were around this area and they were all failures. So back in the start of the year, as well as in 2023, every time it came around this zone, it was a tough problem. Even now, we are trying to cross those levels and not sustaining really well. But the indications are there for a breakout. Once it sustains 460, it would open a much larger move, possibly even towards 550, 600 levels. So looks promising in the short term. Metropolis, on the other hand, has been a slow and steady move. The momentum has not been great, although the trend is up, making higher tops and higher bottoms. So tough to make a trade here, a case for it. Dr. Lal Path similarly, 2900 has been the top for the last 1.5, 2 years. If that sustains meaningfully, we could be looking towards a move towards 3200 also.
200 perhaps on Dr. Lal Path Labs, and today of course there was a positive kind of tailwind as well, wherein one of the brokerage houses had written on the fact that diagnostic space, at least as per CRISIL, was expected to take off, so some of these stocks are actually reacting to that. But tomorrow is going to be a big day for the auto industry, and especially the two-wheeler and the biking space, because it's the first time in the world that a CNG bike would be launched. Of course, Bajaj Auto has been talking a lot about it and how it could be a complete game changer for the industry. Let me take it across to Shrishti to get the details as to what this bike would mean and how it's going to change the two-wheeler ecosystem. Shrishti.
Bajaj Auto is all set to disrupt the market with world's first ever CNG bike launch. There's a lot of excitement indeed, and why Bajaj Auto is coming out with the CNG model. But before that, let's tell you what all we know so far about this particular launch. So this launch will happen on July 5. Other than that, it's going to be targeting to 100 and 125cc segment. But this is just to start with, because in the next 2 years, there are more launches lined up. If we talk about the petrol tank, then yes, indeed, there will be a petrol tank, because there will be a lot of anxiety related to the CNG pump stations, though it has a larger coverage with respect to the EV infrastructure. But indeed, the company will fit in a small petrol tank as well to cater to the emergency needs. The price expected is around 90,000 is what the reports are suggesting. But the big question is, why CNG and why not EV, where there is indeed already a lot of excitement. So if we talk about the addressable market, it stands at 45% of the overall motorcycle market right now, because of there are so many CNG stations and there's a lot of penetration in the three-wheeler as well as the passenger vehicle segment. If we talk about the payback period as well, that is actually 1.2 years, and the vehicle cost is considered to be 20% higher than the ICE engine. Now let's talk about the value proposition as per the consumer, and which could be the best buy for you. So we did compare between CNG, petrol and EV, like you can see on the screens. We did compare the prices, because the CNG is expected to be like 15 to 20,000 higher than the petrol variant. And if we talk about the mileage, then you can clearly see, then though EV is giving you the best mileage in terms of the cost per kilometer, you will see that it's the petrol that is costing you the most. Other than that, it's the CNG, and then EV is definitely the cheaper version of giving you the cost per kilometer benefits. But in terms of the payback period versus the petrol engine, then you will see, given the costing and given the battery replacement cost, in terms of the comparison, it is the CNG that is faring the best right now in comparison to the EVs, and indeed ICE is already there. So all in all, a lot of excitement building in for CNG, as the vehicle efficiency is expected to be more out here.
In fact, just the other day, we did have the Bajaj Auto management as well, and we were quizzing them about what the name of the bike is going to be, and of course, what features would this have. And they did confirm, while of course they didn't let out the name, but they did confirm that it's going to be indeed a hybrid version, which is going to have a CNG as well as switch over to a petrol variant as well. Let's hear out that soundbite.
It addresses a very large market size. Almost 70% of the 1 million per month market of motorcycles is got some level of sensitivity to fuel economy. And our whole effort was that we have to make a significant difference to it. Bruiser was the code name, and that much I can tell you, that it is not going to be Bruiser. The brand name is something else. It's an evocative brand name, and it's going to be something else. It's a bike, like I said, which has got a very standard style. And then it has got biofuel capability, in the sense that it has got both CNG and petrol. So that brings in a large amount of reassurance. And secondly, it also increases its range. I can also tell you that it is, we will start with one or two products, but we intend, depending on how this thing is received, the pace at which it is being received, we intend to widen the portfolio.
So that's a view coming in on Bajaj Auto. But on the charts, Sony, what would be the view on Bajaj Auto? Should one be taking any position, if at all, ahead of that big event?
Seen good momentum, and the entire auto space is looking like it's just bottoming out. If we just look at Bajaj Auto, then 9450 is the level which is a good support. If that holds, it can bounce towards 9600, which is a resistance level. Any move above 9600, you can see that the stock heading towards 9800 as well. Risk reward ratio seems quite favorable. If anybody has to hold, it can be only with a stop loss of 9450.
Right, okay, that's the take coming in on Bajaj Auto amidst the two-wheeler pack. In the meantime, take a look at some of the cement names. They, of course, are cooling off right now. There's Aramco, Ambuja Cement, the rally that actually held out the last 15 days, that actually is coming off a little bit. Some of the Adani names as well, not really participating. HDFC Bank, by the way, is down about 2% right now. L&T is well lower by about 1% or so. Naresh, we've had pretty much a one-way move, right, on HDFC Bank of late. Where is it that you see the stock going from here now?
So technically, the band which has been a resistance is 1700 to 1740. We went about yesterday on the buzz of MSCI inclusion, but we've again corrected today. But till the time it holds above 1680, there is a good possibility this is a breakout move. So it's a risk reward trade closer to 1700, 1720 mark with a strict stop loss below 1680. So for now, we've seen a spike on news, but if it can sustain beyond that also going forward, then it would be a breakout. So 1680 would be a stop loss on HDFC Bank for now.
HDFC Bank. But Sony, what's the view on cement as a pack? Today, all of those stocks were coming under pressure given the news flow of a price cut of anywhere between 10 to 11 rupees in regions of Andhra as well as Telangana. So all of those stocks are down. And of course, on the other hand, you have that entire news of consolidation with Ultratech being back in the fray for Orient Cement. Would you be a buyer on dips for any of these cement names?
I think the entire space has seen good momentum recently, and these stocks can see some amount of profit booking after the rally that they have witnessed. From the entire pack, India Cement is a stock which still looks quite attractive on charts even at current levels, and the stock can test higher levels of 300 or so. So at current level, it's just consolidating now after a good rally, after a good breakout. From current levels, one can accumulate, keep a stop loss of 275 and a target of 300.
Okay, that's the take coming in on some of those cement plays. In the meantime, it's really more of the same, IT, healthcare, pharmaceuticals. They are the names which are really holding the mantle up today. There's Kotak Bank, of course, which is looking also good. SBI Life, M&M, amidst the other names, along with HDFC Life, which are looking good within the Nifty as we speak right now. From within the broader end, Laurus Labs, Zydus Life, Lalpath Labs, Persistent Systems, they are the names which are holding out. But that's not quite the case with the large cap IT names. Wipro, for instance, today is down about 2%. HDFC Bank, like we said, was languishing. So is the case with Bajaj Finance, Ambuja, Ramco. They're all down and out in today's trading session as we speak right now. I just wanted to mark a couple of other movers as well and tell you where exactly things are standing. I want to just bring up the likes of Angel, etc. Because remember, post the regulator, the regulations coming by, you did have Angel, etc. Come off quite a fair bit, and I don't think they've really come out of the woods. Angel One continues to be under pressure after relentless selling the last two trading sessions. Today, though, it's been a much quieter chart, but the stock is still flat. It hasn't seen any recovery come by. The other one, of course, Emcure Pharma, looking at the kind of subscriptions. This, of course, is an IPO which opened yesterday. So that is something definitely that we're also keeping on our radars as well. Indian Hotels, that also started off the day very smartly. Let's check in on where that stock is right now. Phillip Capital initiated on Indian Hotels with a target price now of 600 rupees. It's already crossed that. 612 is where the stock is. But they're saying that they're pretty well positioned now to turf or surf the wave of the kind of high demand that one is seeing for occupancy, which is leading to a positive structural shift in its revenue per room as well. But Naresh, within the entire, hotel pack, would you still pick out Indian Hotels or would you go down the line?
So, given the rally which has already happened in Indian hotels, the risk reward is not great. But one could look at a mid-cap hotel like Royal Orchid Hotels, which has gone sideways for the last 1.5 year, available at the same prices where it was. Same is the case with Lemon Tree, which after the initial move has been sideways, although trending up. So I would go with these two names rather than look at Indian hotels now. And even a EIH looks promising.
That's the point coming in. Naresh, quickly tell us your BTST idea and this breakout that we are seeing on Tata Motors. How sustainable is that?
So Tata Motors as of now needs to sustain 1020 for the breakout, but has been showing good relative strength. So positive on the stock has been the only one showing relative strength in the last few sessions in autos. So positive on that, and there has been some announcement on tariffs, it seems. The BTST trades are a buy on Sun Pharma, which has given a breakout today. Stop loss at 1555, target price of 1600. Second is a buy on HDFC AMC, a new 52-week high here. Momentum continues to be strong. Stop loss at 4210, target price of 4300.
Sonali, same question to you. Sony, I beg your pardon, same question to you. What's the view on Tata Motors as well as your BTST calls?
Also, Tata Motors 980 has been a good support. It's just bouncing continuously from there. But like I would also agree with the view that 1020 is the level which it needs to break to see any continued further upside and a good breakout as well. Of course, it's collected good strength from 980 odd levels. One can just continue to hold with the support of 980. Any move above 1020, it can head towards 1045, 1050. And as for the BTST trade, it would be in the pharma space, Syngene, which is looking quite positive today with fresh long built up position. And also it has crossed 100% of the volumes of the previous trading session. So I think Syngene is looking for a range breakout at current levels. One can buy in futures at 727 with a stop loss of 720 and a target of 740.
Right, okay, those are some BTST ideas coming in with a pharma flavor clearly, given that most of the top movers today are from the pharma and healthcare pack, be it Lupin, Loris Labs, Zydus Life, or for that matter, Lalpat Labs as well, and even Metropolis, which is holding out very well. But an important event, of course, globally, which is taking place, not much of a repercussion for India markets for sure, but the UK elections. In fact, let me take it across to my colleague Sumita Karir and get in the latest there.
Yes, the UK is going to polls today after Prime Minister Rishi Sunak calls snap elections. Opinion polls are predicting a historic landslide for the Labour Party, and the Conservative Party could be punished for failing to deliver on several promises that they made during their 14 years of being in power. In fact, one of Rishi Sunak's closest aides himself conceded defeat, stating that the Tories were in for a landslide defeat. And the reasons are pretty clear for that, because these past few years have been marked by sluggish economy, bloated cost of living crisis, of course, slow economic growth, inflation, which has really pushed people to to question the government's policies. And illegal migration is also one of the issues, with thousands of asylum seekers and economic migrants really crossing into the country in recent years. And then there is a health crisis as well. And that is why the Labour Party's campaign has been focused on one single narrative, and that's change. And of course, from an India standpoint, this is being seen as positive, because India-UK ties stand at an interesting crossroads. There will be political certainty now after Brexit in the country. So whichever party wins it, these ties only go up from here. Now, this is because of a couple of reasons. A, India's growing geopolitical heft and economic clout as well, and which is why you would have also seen the Labour Party stance mellow down, soften, which was still 2019 seemed to be antagonistic towards India. That will soften even further, because they've also stated that they are committed to stamping out anti-India sentiment. Talking of business between the two countries, well, India's exports to Britain are nearly 6 times that of its exports to Russia. In fact, the CEPA deal was also signed. FTA has been in the works since many years now, and that is likely to get signed, that is likely to get finalized after the government gets elected. And that FTA will lead to doubling of bilateral trade. India is also part of GPAI, which basically means that there will be the tech agenda could also be expanded between the two countries. Now, FTA, most importantly, is being seen as high on priority. So no matter whichever party wins, they will be focusing on that, given that fixing the economy and getting investments in is one of the key election issues.
All right, Sumita, thanks so much for taking us through that. I'm going to take you through what today's trading session has looked like. And remember, when markets opened today, you had Nifty, Nifty Bank, Sensex, Nifty Mid Cap as well as Nifty Small Cap hit a record high just at open. So good moves coming in today, but as you can see, Nifty 50 currently very flat right now, fizzled off all of those gains that it saw in the day, but still holding on to the green by the skin of its teeth at 24,308. Nifty Pharma also hit record high levels today, led by Lupin. Very good moves coming in on that front as well. You have Loris Labs, Zydus Labs, Granules and Ipca Labs. All of them have aided the Nifty Pharma sector. IT also second most topmost gainer today, led by Coforge, Persistent. Very good moves coming in, Persistent and HCL Tech as well. Both of them up 3%. You have Infosys as well as TCS as well. So those are all the stocks for you on the screen from the IT pack that were shining bright. Moving on, let's talk about some stocks that have hit all-time high today. You have Cochin Shipyard, Hutco as well as Cello World. Cello World on the back of that QIP, and Cochin Shipyard because we have been seeing some exuberance in the defense space. And Mascot Dock also, while talking about defense, was in focus because that company crossed the 1 lakh crore market cap today as well, and that stock also locked in upper circuit. Very good moves coming in from Mascot Dock today as well. Rights was up 7%. You had Inox Wind up 10% on the back of that equity, on the back of fund infusion by the promoters of 900 crores, making the company net debt free. NBCC was up 8% on the back of an order win, so that stock has also done pretty well. GETND, ITD Cementation, all stocks were up. On the flip side, Aavas Financiers was slightly under pressure. But well, yes, this is how we're summing up today's trading session. Nifty barely holding on to the green, but at 24,304 after crossing 24,400 intraday, fizzled out on those gains, and this is the level where Nifty is closing today.
If you like this video, then like, share and subscribe to ET Now.